Hey guys, today I'm telling you some of the best ways that you can save your money on your taxes. Most of us work extremely hard to pay our taxes, and the rest of us don't work at all and get paid by the taxes. Just quickly, that was just a joke. Everyone's situation's different. Some people do need money from taxes and yeah. Anyway, luckily for us that do need to pay taxes and we feel we pay too much taxes, there are many ways you can reduce how much you need to pay in tax. However, if you plan on not going to jail for tax fraud, I'd really recommend watching this video and making sure that you're following legal methods rather than hiding or lying about your money. So I am sharing my legal, keyword legal, ways of saving money when paying tax. Now first off, this is one that I feel a lot of people are going to be able to do because a lot of us are invested in stocks. Obviously not all of us, but a lot of different investments, not just stocks. However, I feel like this one is quite easy for most to do because something as low entry as stocks is available to most of us. Now this is called netting your gains. This is typically used for things like the stock market. However, you can net your gains on a lot of different things. Now this isn't the most fun way by any means, I'll tell you why later. However, this is something you definitely should always keep in mind when investing. Netting your gains is when you use your capital gains losses in order to offset your profits from your capital gains. So typically, unless you're very calculated and very lucky and you're always in the green, you have no investments that are going down, all of them are going up, then you are going to need this. And just quickly, if you're one of those people that are always in the green and you're never making a loss, you're always making a profit, feel free to let me know how. However, for the rest of us which aren't as lucky, it is likely that you always have some investments that are also in the red and you're losing money on. Now I hope that you also have some, hopefully more, that are in the green so you can make a profit. So when you have some that are going down and some that are going up, you can actually use those losses, if sold in the same year, to offset the gains that you've made from the ones that are profitable. Now I said before, this is not by any means the most fun way because in order to do this you need to make some form of loss. However, this is something that you should just consider doing if you have already made a loss and you're thinking of selling. The only alternative to this is if you think it's a better idea to hold on to it and wait until it goes profitable. This is completely up to you. You should be able to dictate whether you think your investment's good enough to come back or if you think it's best to get out now. Now just to clarify as well, you need to make sure you sell both of these investments within the same year, and they also typically need to be the same type of investment, such as 2 different stocks. Now I'm assuming you kind of have the relative idea of it. However, if you don't, do not worry, I'm just about to explain it with a bit of an example. For example, if you've invested in 2 stocks for 1 year, one of them gives you a profit of $1,000 and the other one goes down $400. So you've made $1,000 in profit and $400 in losses. Now typically you need to pay taxes on whatever capital gains you make, meaning that investment that gave you $1,000, you need to pay taxes on that $1,000. However, if you were to also sell the stock which lost you $400, you'd be able to use that $400 to offset the $1,000. Now you can't actually offset all of the $1,000 because you only lost $400, meaning you'll be able to offset $400 of that $1,000, meaning in the end you'll only need to pay taxes on $600 of those profits. So you can see why this is something very handy to just keep in mind, because if you're going to be selling something which has gone down in value, you might as well be getting something out of it. Now this can be done with other types of investments. You can do this with real estate depreciation. However, just keep in mind when you are doing this, they do need to be 2 of the same investment types. You can't be offsetting real estate if you're investing in stocks as well. It needs to be the same type of investment. Now the next thing is something which I feel a lot of you aren't going to be happy I'm saying because it's something that, well, why have you come to my video for? And this is really just having someone with more financial knowledge, whether it's an accountant or a financial advisor. Now typically, depending on your situation, this financial advisor can end up saving you more money in tax than they actually cost. And this can often leave you coming out more profitable than if you didn't have any assistance. Now, like I said, this varies from person to person. If you're not making a heap of money and not paying a lot of taxes, it's probably not worth your money. However, if you are making a lot of money and you're paying far too much taxes, it's worth having someone help you out. Now, you don't always need a financial advisor. I mean, you can go through it all yourself. You can go through all the tax code and find out where you can deduct certain taxes. However, for the large majority of us, we all don't have that knowledge, and you should be speaking to someone that does know about it. There are plenty of people that go through college and university to learn all about this stuff, and they can really help you a lot. So this one's very much up to you. However, for a lot of you, I would recommend this because sometimes this can actually make you money more than you would be spending on the financial help. But like I said, it's a good mix of all these different things. There are a lot of very simple ways you can save your taxes, and these are things you can do yourself. You don't need to pay someone to do it for you because they're quite simple. Like the first one I already said on your investments, and now I've got one more. Now this is my next and final method of the video, and this is something that applies to all of you that invest in real estate or all of you that are planning to invest in real estate. Now if you aren't, and that is completely up to you, and it could be because of finances or anything, but if you can, I would really consider investing in real estate. There are a lot of advantages, but anyway, that's completely up to you. But for anyone that is investing in real estate, this method is for you. This can save you a lot of money in taxes. This is a very simple method, and this is for all of you in the USA. You can't do this in a lot of other places. However, you can always check and see if this is available in your chosen country. When you invest in real estate, you obviously invest with the hope that you are going to make some form of financial profit, most likely appreciation. So let's say that you buy a house for $300 and then in a few years you sell it for $500,000. First of all, congratulations, that's great. You have made yourself a $200,000 profit. Good for you. But now what sucks about that is you need to pay your taxes on those gains. So you need to pay your taxes on those capital gains, which is $200,000. However, lucky for you in the USA, there is a very large encouragement for people to be investing in real estate. So if you go ahead and you say, I'm going to buy more property with the gains I just made, you don't actually need to pay any taxes on it. Now, I would very much consider looking into this. It is called a 1031 exchange, and this is currently available in the USA. Now, there's obviously a bit more involved. It's not as simple as that, but that is essentially what it is. So I'd really recommend searching that up if you're into real estate investing, and really do take advantage of this great opportunity. I'd talk more about it, but I don't want to waste your time, especially because not all of you are going to be real estate investors. But for you that are, please do search up a 1031 exchange. Now, thank you so much for watching, guys. I really do hope that I've helped you in some way or another. Please share your knowledge if you have some of your own methods of saving money in taxes, and do write it down in the comments below. Hopefully the IRS doesn't come after all of us in the comments. Please keep in mind that you should always speak to a financial advisor or do your own research first. I'm not qualified by any means. I'm a 16-year-old boy. I really am not the most qualified for what I've said, but this is just some ways which you can hopefully look into and save some money. Thank you so much, guys. I'll see you in the next video.